TAQ Capital, technical analysis quickly.
This is not financial advice. I am not a financial advisor. Before taking any action based on the information provided on this channel, it is recommended that you seek the advice of a professional licensed financial advisor.
Let's do this.
All right, welcome back to the channel, everyone. I'm going to do a quick video here on Ethereum. And some of you may be wondering, what in the heck happened yesterday if we opened up here like the little mouth and the Kijin went flat. How come we didn't call them back down? Well, we sort of did, but then there was just a rocket that took off. And I'm going to go with market psychology more than anything. We were starting to get some bullish activity after a bunch of bearish activity, which followed a big meltdown. And I think people were just excited and jumped back in. And it just rode it up and up and up. Now, to give you an example from history, this is the 2-hour chart. You can see here that we went up, came outside the Bollinger Bands, which we did here too on the current one, and then these started to separate, right? And you can see that they started to separate right here as well. And then we called them back in and they came down. That is a typical one, which is why I have it labeled. Then you'll see this triple factor, which is what we did here. On the right here, you'll see that we went up. Oh, actually, let me back out of that real quick. I might need to zoom in for a second. Okay, here we are zoomed in. We went up here, down, up here, down, up here, and down. And now, as you can see, right now, we're doing our actual breakdown back to the Kijin, which has been holding since this position pretty much since midnight. And it's currently 10:43 a.m. Eastern Standard Time. So if we go back and compare this, I mean, this is obviously a much bigger scale, much bigger percentages. But we had our first run. Well, I don't even know if I'd call that a run. That was almost a bounce on the way down. But there we go. So we got our first run, second run, third was pathetic, and then we came crashing down. But you saw that it opened in the exact same fashion here, creating this circle almost as it did here. So what's the difference? I mean, you kind of, up on this one, you rode the Tenkin up and then came crashing down, and then it triggered the big meltdown. In this one, you came shooting up. This was just like what happened last night over here. And it rode up, then kind of rode the Tenkin, and then instead of crashing down through the Tenkin and the Kijin, it started to call the Kijin up. Now, it started to call the Kijin up here, but the difference between the two is this one is standing right up, whereas this one is kind of coming in at an angle while this one came down to it. The Tenkin held its own a lot more than the Kijin pulling it up, and this is more bullish. And here on the right, you see the Tenkin kind of held straight. It wasn't getting called down. There wasn't a lot of room to go down, though, either, to be fair. But then the Kijin just stood up. So it was more about the Kijin going to the Tenkin than the Tenkin going to the Kijin. But, I mean, here you've got a 50-50. And it called the candles down to the Kijin. Here you've got the Kijin holding steady while the Tenkin came to the Kijin and it came crashing down below. Here you've got the Tenkin holding a heck of a lot better than the Kijin. I mean, if we just draw a line right here, that was the movement for the Tenkin, whereas the movement for the Kijin was from here, to this line. So that's way bigger than this little space. So this one was more bullish, but we didn't get a lot of that over here. I think it was just too cramped. It was too tight of a space to really see that unfold. And you could say that, well, all right, instead of looking at the 2-hour, let's drop down to the 30-minute and see what that says to see if we have a similar pattern. And I guess, we definitely do. The Tenkin held strong. The Kijin came up to it, and then it went up again. Whereas here, the Tenkin came down to the Kijin, and then now we're coming down. So you still see it play out that way. There are times you'll be thrown, though, make no mistake, where the Kijin will come up, the Tenkin will hold pretty strong or maybe come down a little bit, and then as it gets there, it just falls through. Another thing to keep in mind are the different time frames. So while we've got our typical and our triple here, and then the triple giving us the double mouth scenario, this is on the 2-hour. If you zoom out to the 4-hour, that triple becomes one mouth. See that? Now, it's one where the Kijin is being called up while the Tenkin is, barely moving. So if the Tenkin space is this, the Kijin space is all this. So this is one of those scenarios where you have a lot of movement in the Kijin, but you have small movement in the Tenkin, and yet once you cross their meeting point, you come crashing down. So you've got to kind of look at the 2 hour as well as the 4 hour. So when you're looking at the 2 hour here at, say, August 11th at midnight, okay, you're getting this big separation. So what does August 11th at midnight look like on the 4 hour? Right here. Very similar. You've got it open here. You've got this coming right up. So you can't see past this right now. So you just have this giant mouth, and it came in. So I would have called this coming down to here as well. And it didn't. It stopped right there. And then on the next candle here, let me do a replay. Okay, so this is what you would have been looking at. And I would have called this coming down to the Kijin, because here it just looks like it's held up on the Tenkin, which happens. And then once, it breaks the Tenkin, then it'll come down and meet the Kijin. So if we hit play, you see it go back up, come down below the Tenkin and go back up above it. And then as soon as that happens and it's picking up too much bullish activity, you see both of them stand up, the Tenkin and the Kijin. Same move again. Same move again. So they're going up in tandem. And then they dog ear in tandem. And you see, okay, see right here, the Kijin continues to go straight while the Tenkin stands up a bit. Same thing, Kijin goes straight again, Tenkin up a bit. So it's growing the mouth. But then on this third one, it starts to pull the Kijin up again. So the Tenkin is definitely outpacing the Kijin. And then right there is where you have the break below the Tenkin. Continue. And that break below the Tenkin, now you've lost the Tenkin as support. Now it comes crashing down. And that second crash, the Tenkin kicks out like a parachute to pull it back while the Kijin comes up. So this is just indicating that this is going to be a little slower than anticipated. Comes down, finds support on the Kijin, and then it breaks the Kijin right there. So it took about like 6 hours, and then now it's off to the races. But even there, you see how the Kijin broke straight. That's going to help slow it down a bit. Pulling it back up to the Kijin. And then they both nosedive. And now they're going to sort of parallel go down, yeah. So you see how that plays out. But I just wanted to draw attention to how it's a single mouth on the 4 hour and a double mouth on the 2 hour. So you've got to watch all these different time frames to see how they play out together. So was there something else at play here, I guess becomes the question. Did we hit a Fibonacci line or anything like that? So if we jump over to the chart that'll give us our fibs, we did not. I mean, we blew through one, and then once we went over it, we found support here, and that support lasted for 2 hours, and now we're falling through it. So, I mean, the fall, yeah, I guess you could say it hit definite resistance here, and if we jump up to the higher time frames, that'll probably just end up being a wick. Let's see, this is the 8 hour, 9 hour, 10 hour. Yeah, the 16 hour. So you see, we caught it, wicked above it, and then we're coming back down. So now, I would imagine we're going to come somewhere down to the 1450 mark. I mean, if it comes like this, obviously this is higher than the 1450 mark. But if it, just free falls down over the next 16 hours, then you're going to be talking just below the 1450 mark before we start back up again. And then the Kijin is coming down to meet the Tenkin, and the Tenkin is actually pointing down, and so is the Kijin. So in the 16 hour, this really isn't looking good. But, are we going to have another quick run up before we continue a lot more to the downside, which I think is inevitably coming? And I think we are. I think that we've got this yellow wedge here. Whoa, that was awful. We've got this yellow wedge here. We've got this yellow the top here, and I think we've got a, well, not I think, we've got a 1, we've got a 2, we've got a 3. So I think if we come down here, we catch support here and bounce back up, that's going to be our 4. Then we're going to have a breakout because it's a downward channel here. So it's got to break up. I think we'll have a breakout, which will confirm the closure of the purple wedge, the closure of the green wedge, this bigger one that started all the way up here at the peak of the June 18th run, and then it'll close the yellow wedge. All wedges will be closed in the the short medium time frame, and we'll just have the one big wedge that we started back at the peak of the market in the bull run. And once we break out of this, I think we're going to flop over, and we might even ride the circle down. I'm not sure. We may come straight down here to where we hit the circle and then kind of go up a bit. I'll see it as it unfolds and obviously report in. Yeah, the more I'm looking at it, I don't think this green wedge is possible. I think, or we're in for a monumental 9/11 style meltdown, an epic sell-off, because we'd have to drop 84% in, well, let's go as tight as we can to that corner by September 9th with some upside right now. So from here roughly to here, so 24 bars on the 6-hour candle, so 6 days from September 3rd to September 9th, and that would take us down to the $189 mark. And it would actually potentially shift the orange a little bit. Let me go back here and fix this, because this will make all the difference. Pivot that out. So then we'd have to bounce off the green line, miss the orange, or we're going to set a new low, which makes this not a hit, and it would be this that's our hit, which is perfectly fine. And then we go up and break out, and that'll probably have us doing that by the end of the year, I'd imagine. I mean, can you imagine the fear and greed index if we come swinging down in these areas? Because if this green wedge is legit, and again, I haven't seen these wedges fail, then we got to hit on this line. The only other possibility is that we go even lower by dragging this out further, and then this does become our hit, which makes this not a hit, and then we have more time to do it, but we're going to go even lower. But I mean, that's Ethereum at $5. I just don't see that happening. So this is scary. This is talking about a major Ethereum meltdown, and you're going to want to compare that to what Bitcoin's looking at, because Bitcoin is king. Okay, Bitcoin looking at the daily. Let me drag these way out. We don't really need them. We have our 1 at the peak of the market, 2, 3, 4, and now we're, everyone's anticipating some more down before we get our breakout down here. Or a lot of people are anticipating this, myself included. And as you can see, we have a very similar thing going on. This purple wedge here, it's formed like that. Let's zoom in on it. We've got our 1, 2, wick up here, 3, and it looks like it could be a swoop breakout thing, but we don't have 4, so it can't be a swoop breakout thing. So if we look at the internal green wedge, 1, 2, 3, 4, and we just had breakout. It was a pathetic breakout, but it was a breakout. So the green is dead, and now we're starting a new purple wedge. Instead of just redrawing the green one out, I wanted to show what we were in, how it ended, and now we're back to a different wedge. So we're in the purple. So this hit here is 3. So now we've got to come down and hit 4. I don't even know if we have room to start this hypothetical wedge now, because this would take us up to breaking out here. If we did this scenario, I suppose we could do a bounce and come back down here. It is possible that we do have another up, but then where that meets the purple down here is even scarier, because it's not this purple. Oh, 1 second. Let me zoom out. I'm sorry. It's part of my screen I can see that you can't. There, that's what I was talking about. It's not this purple, which is the wedge from the peak of the market. It's this purple we have to meet, and we have to avoid this corner just like we have to do on Ethereum. So what does that look like? If we move this as close as we can to that corner without hitting, we're just outside the green line. And if we've got to hit here, I mean, we can't go up because this purple's a new wedge. We don't have our third hit yet. That's 3 because this is no longer 3 up here like it was on the green wedge. So 1, 2, 3, miss the purple, comes straight down. 10,000 would clip it without coming down and hitting this one. Not that we can't hit this one, we can, because then it would just adjust this purple line a little bit, which is no big deal. So then this would become, if we did, and we hit like down here, say at 7,000 off of this purple line, so we hit off of 7,000, this dashed purple line now has to come through there. This would be our 4th hit on the peak of the market bull run wedge, and then we break up. Now, I don't think it's going to be like that, but you get my point. And then we'd break up out of all the wedges. And that would, because this purple wedge would actually be running at that point way out here. So when we hit off of this area, we would break up, close this purple wedge out, and then close this purple wedge out and continue going up. So I guess what is going on the Fibonacci on Bitcoin around the $9,000 mark, and we'll compare that to the Fibonacci on Ethereum. Okay, this is a busy chart. I understand that. We're right here, right now, in this big red candle. So if we take that as our third hit, we did a swoop like this, and now we're coming down. We would have to come down to the $10,000 mark, and that's here. We've got the blue Fibonacci ring, and we've got a purple Fibonacci line. So it's distinctly possible that we're going to get caught by the ring, and that would take us down to the $8,000 mark, or somewhere in there. I mean, obviously it can go like this, but where does this orange line cross? That's the key, and that's right about here. So 7,500-ish. And you can see this blue fib line, fib circle, is part of the gray here, the blue here, the green here, different green, and red, okay? So let's look at the way that this circle's been respected in the past. You've got hit there, took off, came back down, hit the same ring again, took off, came back down, found support, but then broke through in one candle, came up, hit it, resistance, came back down, came back towards it. So now we could come down, ride this green down maybe, get a little bounce off of this one, ride it up a little bit, catch, get a little bounce off of this one, ride it up a little bit, and so on until you come down, catch this one, and this one being the bottom, we might ride this thing all the way up, or even break through it and hug the other side of it and ride it all the way up. So this could be a very steep growth. And, you know, with the 17,000 bottom that people called back here at the beginning of the June 18th wedge, that's definitely not bottom. I mean, this just, like I said, these wedges don't lie. So if we look at this on Ethereum now, it's these pink lines that are not dashed that is the new wedge that formed. Because if we back up for a second and look at the dashed green line, we got hit, 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 hit. Wait a minute, not the green dashed. Hold on a second. Sorry, the bouncing back and forth between coins is throwing me. So we've got 1, 2, 3, 4, and now we're trying to come across to do our breakout. But if we keep coming down, however we do it, this would be breaking out of the June 18th wedge. We keep coming down like this. We've got to make contact with this green dashed line at some point. And where it hits the fib circle is right here. So we may find support here and come back up because we've already got our 1, 2, 3, 4 in on the green. So we should not hit the green line. Unlike Bitcoin that has to hit it, we on Ethereum should not hit it. So I bet this is the turnaround, and that's just above 600, so $630. So we may wick through this here and then kind of come back up, stay in and ride the circle back up, or it'll just be a break through the circle, saved by the line around $600 ish, and then we'll come back up, you know, and deal with these Fibonacci's as we go. So it's the same scenario. It totally works. It's just instead of having to hit it, it has to miss it. But if you've got Bitcoin melting down like this, you're going to have Ethereum and the rest of the market melting down in a bigger way. You just are. So then what does that mean for all of these wedges here? I mean, right now, you've got to break the yellow wedge up and not down. So Ethereum's got to have more up in her before it comes down. Oh, that is an added complication. So then is it just going to break through the circle and more like this? Because if we break up here, break down, hit there, go back up, I mean, that would still work. Okay, here's the zoom out. Down here we have the RSI. Up here we have price, obviously, and then volume at the top. This is the daily chart. So if we zoom in on the RSI, this absolutely supports my theory. You got the first hit here, which was actually back in 2017. Second hit here, what we then would need to avoid this one, because we go from the second hit up to the third hit here, and now we're working our way down to the fourth hit here. And this has to be down here in the like really low RSI, what is it, 10? Because we have to avoid this spot right here. So that means that we're going to have a crash from in here, which is about 35 RSI, to 10 RSI by, well, I mean, really, it's got to be, I'm anticipating before the end of the year. So we'd be looking at here. So we've got to drop straight down. And you can see this drop that started on August 10th, how far we've gone to August 26th. If we did that exact same thing again, that'll take us to middle of September. So we can slow it down, because I think we'll be looking more like, December. So we've got some version of a trajectory like that before we hit here. And then we can go up. And we actually then at that point would have to break over the pink line. So we'll be looking at somewhere in like, over 85 RSI at some point that'll break it. Because back here, our RSI was 92. And then once we break that, we then start a new one down. But I mean, this could take, 2 years to come up here to break that line. I mean, what is the date here? It doesn't even show me the date. It's so far out. Wow. Anyway, my apologies, guys, for the length of this video, but, we just discovered something, and you sat here with me while I did it. I mean, I totally thought that we were going to be doing this run back up in the pink, and it looks like we are. So we'll come down, hit here, go back up, and then probably not, if I'm remembering this correctly, touch the green line, because that'll give us 3, and then come down here and clip the 4th. But this drop, again, the wedges don't lie. I'm going to short it, so I don't care what it says. So it's not like I don't like it. But I am shocked by it, that it's coming that soon. So just be mindful, if you come down here and you do go into a long here, when you come up here and you hit this green line, get out, and get out fast. And if you don't play the perfect game. Like if you miss it and you get out here, get out here. But you don't want to be a part of this epic tanking that's coming, that, it's definitely, I think, by the end of the year, but it could be even sooner than that. So good luck trading out there, and like, share, and subscribe to this video if you found it helpful. Subscribe to my Instagram, because that's where I'm going to be posting updates as I'm seeing things unfold here. But try to understand that I do have a life as well, so I'm not going to catch absolutely everything. But you can message me, and I can hop in and take a look at stuff and fire off a quick video if that'll help you guys out. So thanks again for watching, and I hope you have a great day out there.